This is the Self-Storage Podcast, where we share the knowledge and skills from the industry's leading investors, developers, and operators to help you launch and grow your self-storage business. I'm your host, Scott Meyers, and over the past 16 years, we have acquired, developed, converted, and syndicated over 2 million square feet of self-storage nationwide with the help of my incredible team at selfstorageinvesting.com, who has helped thousands of people achieve greatness in self-storage. Hello, everyone, and welcome back to the Self-Storage Podcast. I am your host, Scott Meyers, and this week's guest is Gil Siedner, Vice President of Business Development at SecondRE, a company that partners with real estate sponsors to provide liquidity for real estate through buyouts and secondary investment opportunities on the SecondRE marketplace. Gil has served as Vice President of Investments at Skyline AI, a property technology company that was eventually sold to JLL Commercial. He also spent time as a senior real estate investment manager for 2 large insurance companies. Gil holds a BA in economics from Tel Aviv University and an MBA from Ben-Gurion University, both in Israel, and he now resides and his company is based in New York City. And on this episode, Gil and I talked about the many options his company provides to syndicators and passive investors alike with his innovative business model that has been in need for so long in the real estate syndication sector. So without further ado, please enjoy my conversation with Gil Siedner of SecondRE. Gil, so good to see you again. Welcome to the show.
Thank you, Scott. Happy to be here. Thank you for having me.
Well, Gil, you and I have been talking and getting ready to do some business together, and I thought it was time that I introduce you to Storage Nation, because what you've got is something, well, that we haven't seen in the marketplace before, and I think many people here on this podcast are going to say, gosh, why didn't somebody think about this many years ago? So, Gil, I've given everybody a little bit of background on you and your bio, but why don't you fill in the gaps and tell us a little bit about how you started this incredible business?
Sure. Again, thank you very much for having me and the opportunity to really explain to people what we're doing. So I personally come from a real estate investing background. I've been doing that for the past 15 years for 2 of the largest insurance companies in Israel. So very institutional minded kind of real estate investments. And I actually joined a tech company 4 years ago, which was actually bought by JLL, and really find out the great connection between real estate, the old-fashioned real estate, and technology. And obviously, technology can do a lot of things for a lot of different businesses. And this is what we did with Skyline, and this is what we're trying to do with SecondRE as of right now. And if you think about real estate, the biggest problem is illiquidity. I mean, by definition, you buy real estate, you hold it until you actually sell the asset, but you cannot trade very often on the real estate itself. And that's what we are trying to solve here. We've built a platform that really enables LPs or investors to trade their existing shares in real estate assets. And we are trying to simplify, make it more efficient, and streamline the process. Again, liquidity is optional for LPs, but it's very difficult, very unnatural for an LP to really swap his holding with another LP. This is a very complex structure, complex process. You need to get a sponsor involved. You need to get his approval to do so. And what we are trying to do is really streamline the process with SecondRE. Again, the concept is not new. But I think that in the past few years, when you see a lot of crowdfunding platforms coming into the market, people are getting more used to trading and buy real estate through an online platform. This is where we came in. We can do the same thing on the primary offerings, primary market of real estate, only on the secondary stage and secondary market for real estate. That is in essence what we're trying to achieve here.
Okay. So tell us how the process works, and maybe, Gil, tell us about the process in terms of an example. Let's say somebody does want to create a liquidity event. Maybe it's on the sponsor side, or maybe it is one of the limited partners that wants to be able to exit the process. You take a pick and walk us through the process.
Sure. So either on the sponsor side or the LP side, at the end of the day, we are only, let's say, negotiating, but we are in touch with the sponsors. The sponsors, these are the main character here. He's the one approving each and every deal. We need his help. We need his support. And by the way, we do it all for free for the sponsor. We are, by the way, I didn't mention that we are a registered broker dealer with FINRA. And as I said, we facilitate the trade and we collect fees from the buyer and the seller. But for the sponsor, we're not collecting any kind of fees. What we need from the sponsor is really his cooperation. So we get in touch with sponsors, we look into their portfolio, we find the assets that are most suitable for putting into the platform. Both the sponsor is okay with that and we are okay with that. And we start our internal due diligence process. So we actually vet the sponsor, his track record, how he do business, and what's the optimum business plan for each and every investment he makes. That's one. And we also vet the specific investment and we want to put into the platform. Again, it's not us really determining if the business plan is okay or not. It's just checking the numbers, seeing it's really kosher, and we need to get behind these numbers at the end of the day. So we do the full vet on the sponsor and the investment. And if you find it's okay with us and obviously okay with the sponsor, we create an asset page, a digital asset page for each and every investment. We ask for the sponsor for the historical information about each and every asset. So BOM, the asset management reports, information about distributions, loan information, and so on, and create a digital OM. And this is a page that potential investors could come in, really validate the asset, validate the offer, and decide what's going to be the right pricing for them for this specific offer. And on the other hand, there are LPs that obviously own the shares and want to sell it. So they can put their bids into our platform. We have an order book, very similar to how you trade stocks on the stock exchange. So we have a bid, you have an ask, and the price is actually determined by the buyer and the seller. You can put on a price, you can put on the number of shares you want to buy or sell. And on the other hand, if there's a match, there's going to be a trade at the end of the day. So again, people come in, put orders on the order book, and if there's a match, very similar to how you trade stocks, there's going to be a transaction. After this happens, we inform the sponsor that there is a potential transaction to be made. Sponsor is the one approving the price and approving the transaction. And he also needs to approve the identity of the new investor. And that's the third vetting we are doing, the new investor. Because all of our investors are accredited investors. We only let accredited investors into the platform. And before a deal is actually happening, we are doing a KYC, AML, and third-party accreditation for each and every investor. And we provide this package of information to the sponsor. And he's going to be the one reviewing it and approving it if it fits. So again, he'll be the one that will eventually control the process of approving the deal and approving the investor. When this happens, we have full approval from the buyer, the seller, and the sponsor. They all sign a transfer agreement. The only thing that really changes is the basis of the new investor. It could be the same, it could be less, it could be more, really depends on the pricing. And the new investor will actually inherit each and every term, legal term, and tax structure the old investor had. So we're not getting involved with litigation, negotiation, the LPA, and we're not recreating the tax structure in any way. It's a designed process to really streamline the process to make it as easy as possible, especially for sponsors. Then again, all of these services we provide, we only take the fees from the seller and the buyer, never the sponsor.
Okay.
That's it.
Well, Gil, lots of questions. We've had a number of our single asset, single entity syndications. We've had a number of times where the limited partners say, hey, I'm looking to sell. I need to sell. I want to take advantage of another opportunity that I have, or I just have to sell right now because I need the cash. And the challenge is, depending upon the investment vehicle, we don't go through and get a broker's opinion of value. We don't update the valuations. It could be a development project, or it could be just something that's in lease up. We're not at the place where we have a stabilized value and we have an appraisal or anything. So, it is, open to interpretation in terms of the market valuation. So I know you mentioned you leave that negotiation up to the buyer and the seller, but as a buyer, if I'm a buyer and I'm an accredited investor on your platform, I'm going to look to see what's available out there. There is a limited partner in an investment that is looking to sell, and I've got access to the PPM and all the documents, as if I was coming into it new. The investment is a new investor, but still at that point, we're 3 years into it. I may have some financials. I still have to do my own evaluation as a buyer, wouldn't I? And to determine what the value is compared to what the investor or the limited partner says he or she is looking to sell it for. Is that correct?
Yeah, it is. And that's exactly why we created this asset page. I mean, it's a very long page with a lot of information, really comparing the original OM provided to the original investor with the actual performance up to date and even going forward. So again, we're not determining price. We are providing investor with solid historical indication regarding valuation. So it could be the original acquisition price. Obviously, we'll state that. If there was a recent BOV, we'll do that, and we'll add that as well into the document. If there was a refinance and then an appraisal, we'll add that as well. And again, this is not determining the price in any way.
Right.
This is just giving some kind of comps, right?
An update, sure.
Exactly. And this will probably get the investor comfortable enough to really decide on the price. We also translate the share price, into more handy real estate terms. So for each and every share price people could put bids on, we calculate the cash on cash return based on historical distribution. We calculate the cap rates. So it's not detached from, everyday real estate investing. It's not only shares and share prices and things like that. It's real estate. This is what we have as, basic information in our platform. We also provide sensitivity analysis for buyers and sellers. So let's say I want to sell at a 15% premium to my original basis. So again, we translate this share price into cap rates and cash on cash. And then the potential buyer will have the ability to really conclude if this is an attractive offer for him, yes or no.
So that means that the syndicator, they have to be very open and forthcoming and give you updated information. There is a vetting process, first of all, for them to be able to be on the platform. And I'm sure that's part of it, is you state to that syndicator, you have to share your books and records so that we can essentially see, and I'm guessing here, tell me if I'm wrong, that here are the projections that we set out as a syndicator in the beginning of this project. We're 2 years in, here's where we're expected to be. And that's part of your homework then, is to say they're on a trajectory that is close to where they expected to be in 2 years, right? And then that information is relayed to the potential buyer if there's an LP that wants out. Am I making sense? And is that correct?
Yeah, that's exactly the process. And we update our OM, our page, each and every quarter. So we get quarterly updates similar to how investors get quarterly updates with the financials, with the rentals, if that's relevant for that specific investment. And we keep on updating what we see in the platform at the end of the day. I mean, more than that, if you had an original business plan and something happened, not always your original business plan is relevant for the current market conditions. So we can get the update from the sponsor and we can highlight that in the platform. So the investor would have full visibility regarding what's going to be planned and what's going to be actually executed in the asset moving forward.
So if I am an accredited investor and I'm coming to SecondRE, and I'm looking at the different opportunities out there, am I coming to you expecting to get a better deal? And you may not be able to answer this, than if I were to be that same accredited investor, but looking in the marketplace to get in on the front end. Am I more likely to find, say, a better deal because there's some LPs that are looking to get out or need to get out? And so I may step into a better situation on your platform than if I were to have gone with a sponsor to begin with, or find somebody else at the beginning of a project?
Good question. I think it varies. It really varies on the LPs that really want to do it. If you have an LP that is super distressed, he needs his money tomorrow morning, he will be the one probably putting the price that reflects a 15% discount.
Sure.
And then if you find this kind of LP, you'll have an opportunity. Again, we calculate the cap rate based on this pricing, and I don't know, if you buy it at an 8% cap, you did a great deal, right? On the other hand, we do have other investors that are more sophisticated. They're less stressed by definition. And maybe they want to, diversify into other asset classes. So they want to sell and not necessarily at a loss. So they will add a premium to the original basis. And for some investors, it will be enough because, again, this will translate to an 8% cash on cash as an example, right? For some investors, this will make sense. So again, it's all around. Really depends on the LPs and the specific situation.
Well, the answer is always it depends, right?
Exactly.
So we're seeing a big shift in the economy right now, as you and I talked before we got on camera.
Yeah.
Tell me how that affects what you are doing right now. There's a lot of transactions, a lot of people pulling cash, coming out of the stock market. They may be sitting on the sidelines, but they need to get back into the market because inflation is so high. What are you seeing, and what kind of an opportunity does that represent for you and your company, and the folks that would want to come along as passive investors on SecondRE?
Yeah, I mean, these are interesting times, difficult for some, obviously, and opportunistic for others. That's the way it is, obviously. But, I mean, twofold here. One is from the investor side. I mean, there are, as you mentioned, people that are losing money on the stock exchange and really need to liquidate other investments they have. So these are potential sellers in our platform. And without our platform, without this liquidation option, they don't have a lot of choice other than, stay with the investment. So this is one thing we see. The other thing we see is sponsors that, let's say, communicated to their investors that in 6 months' time, they'll probably see a disposition in the asset or a major refinance, and they could get most of their equity or all of their equity out. And came this time, and it's really, really hard to sell right now at the right prices. And it's obviously very hard to refinance with the current rates. So we give these sponsors the ability to make the LP life easier. If there are a group of LPs that really want to liquidate because they thought this would happen, in 6 months' time, the platform, the secondary market really enables them to liquidate. And we see that more and more communicating with sponsors all across the board. So this is one, effect the current situation has on our business.
Okay, so let's flip the switch here a little bit then. So for syndicators like myself, what is the biggest opportunity or the biggest benefit of then putting our offerings on your platform?
I think that the biggest opportunity is really the mitigation of the time horizon here. So you have a sponsor who's a real estate expert who wants to be flexible as possible when dealing with real estate assets, right? Maybe he had a plan to sell 2 months ago, but now the market are very slow. He wants to keep on holding the asset for additional 2 years. Or somebody raised a fund 10 years ago and now he needs to sell everything, and hopefully he will not need to because he'll have other solutions to do so. And on the other hand, you have LPs that, they got a promise that will liquidate in 5 years, on 10 years, but this is something that cannot happen right now. So the option of liquidity is really enables to both sponsors and LP enjoy both worlds. So sponsor will get unlimited time frame for doing business because they all can say to their LPs, you now have an option to liquidate. We want to keep on holding the asset. You have the ability, you have this insurance policy. If you want to liquidate, you can do it through secondary. And even for primary offerings for sponsors, again, I'm going back to the example of somebody raising a fund for 10 years. It's intimidating for a lot of LPs, park their money with one sponsor for 10 years. So if right from the get-go, they'll have this insurance policy saying after, let's say, the investment period, after 2 years or 3 years, you'll have the full ability to liquidate. If you really need the money, you can do that with secondary. And this is not something that was commonly available to sponsors and LPs. So by that, I see the greatest advantage we have for sponsors and LPs. It's hard, right? Because the end of the day, it's a new concept, utilizing this liquidity. But if you think of it, if it becomes more common, this is something both sponsors and LPs will enjoy.
All right. Well, Gil, tell me what it is. Any other questions that I should be asking? This is new, and we're very new to the platform as well. And I guess even before that, one of the questions I have is: do you foresee a time when you would open this up to act more like some of the other crowdfunding sites where you have a number of accredited investors on your platform, and maybe there aren't enough opportunities for them to be able to deploy capital? Would you see this opening up to being able to raise some capital, or have some folks like myself come in and put some offerings on your platform as well? Is that part of the business plan, or is that just totally against what you're doing?
It's not against what we're doing. It could be a part of the business plan. I mean, in essence, we have an investor pool, all accredited, by the way. It only makes sense that we utilize them for primary offerings as well. So again, as I mentioned, I think we have the additional benefit for investors and sponsors with the option of liquidity. So every primary offer we can offer a sponsor, a promotional primary offering for sponsor, could include this insurance policy of liquidity. And this would make us, I think, more interesting for sponsors and LPs, other than, the regular options you have right now.
Great.
So yeah, to answer your question, yes, we will look into that.
All right. So back to my previous question then. What is there, Gil? What other questions have I not thought of, or opportunities that lie within your platform in this new framework that I haven't asked yet?
I don't think it's maybe a question you didn't ask, but I think that the secondary market is a completely new concept in real estate. I mean, it will make investors will have more possibilities to invest, because at the end of the day, when you're looking at the primary market, a deal is transacted, let's say, each and every 5, 7, and 10 years. And this is where the investors and the sponsor have the ability to really invest in new assets. When you open the possibility for a secondary market, potentially each and every week, people could come in and do a transaction. And this is a much bigger market, a much bigger frame, other than, the primary offerings people have right now. And taking this into consideration, when we'll make the platform big enough to do so, this would be a game changer in real estate. Well,
Gil, as we head into this ever-changing market, we know that a recession causes a lot of turmoil, a little bit of chaos, and there will be people that are looking to grab more cash, even if they're already invested in a syndication or in a fund. And so I think that there's going to be nothing but increased activity. And so I'll be curious to see and report back as to what this looks like on your end and for the secondary market. Because as you said, it is new. And that is one of the reasons why people have in the past somewhat been a little hesitant to invest in a syndication or in a fund, because they feel like they're in for the long haul, for the 3 to 4 to 5 years, whatever that fund is set out for. And you providing a solution to that is, it's the best of both worlds for investors, syndicators as well. I think it provides an opportunity for them to be able to even trade if they want to buy some of those shares, but it gives them on the front end, if they know that, which is what we're doing now, we know that we're going to be partnering with you, Gil. And so on the front end of our syndications and our funds, we state that you have exit options because we're working with you. And so for syndicators as well, I think this gives them just another feather in their cap and another bullet point to add to their offering that says, and by the way, you have an off-ramp if you want to get out earlier than the 5 years if you don't want to. So I see this as a huge opportunity, and my hat's off to you and kudos to you, Gil, for coming to market first.
Sure. Thank you very much. We really think that liquidity, sorry to interrupt, but we really think that liquidity is, a unique feature nobody's offering right now. And in the next few years, this will be a game changer. This is our belief.
Agreed. Well, Gil, how do people follow you and get in touch with you and learn a little bit more about the platform?
So you can go into our website. That's www.secondre.com. And you can email me at gil@secondre.com as well. I mean, I'll gladly speak with sponsors, people looking for syndication options and liquidity options. And yeah, I'm free for any kind of conversation like that.
Perfect. Well, Gil, thank you so much for your time. I'm glad that we're able to share the conversation and your business with the folks here, because it does provide an incredible opportunity for both passive investors and syndicators alike. And I am certainly thankful that we ran across you, which gives us some additional options for our folks as well. So I look forward to podcast number 2, where we get to follow up to find out just exactly where you're at a few months from now. So Gil, once again, thanks for your time. Appreciate you.
Thank you very much for having me, Scott.
All right, take care. Hey gang, wait, 3 things before you leave. First, don't forget to subscribe to the Self Storage Podcast and turn on your notifications so you never miss another episode. And while you're there, please leave us a 5-star review if you like the show. Second, be sure to share your favorite episodes and more via Instagram, and don't forget to tag us. And lastly, head to the links in the show description and hit the follow and subscribe button on Twitter and Facebook to get a front row seat as we grow and scale our business and bring you along with us. Take care.